Imagine two investors, the tortoise and the hare. The tortoise is a cautious fellow who invests in moderately profitable investments over a long time period. The hare is an ambitious guy who goes aggressively after maximum short-term profit. Who will win? It's a crucial question, right? Let's say you're working hard to save money. Maybe you want a better life for your family, or a comfortable retirement, or just more freedom in your life. Naturally, you want to invest as profitably as possible, but you also want to protect the money you have worked so hard to save, right? In this video, I will explore two questions. First, can cautious, moderate investing be profitable enough to actually change your life? And second, how smart is it to chase profits aggressively? So let's start with the first point. Can you make good money through cautious, moderate investing? I myself started thinking about investing 15 years ago when I started my career in America at the Wall Street investment bank UBS. I grew up in Soviet Latvia in a family of teachers. I mean, just to give you an idea, there were 4 of us living in the same room. No one in my family had any money to invest. Stocks and bonds and gold, all of this was totally foreign to me. But I wanted a different life for myself and for my family, so I went to college in America, and at the age of 21, I got a well-paid job on Wall Street. And soon I had some cash sitting in my bank account, and I decided I'm gonna be a capitalist. I'm gonna invest. Like many new investors, I had some illusions about investing based on various movies and books about Wall Street. I thought that I would find investments which would earn me 20 or 30% per year, or which would double or triple my money quickly. So I was very surprised one day when I met an older colleague named Dave, who had a reputation as an expert investor. He talked with a lot of confidence about his investment strategy, which was actually super simple. Invest in the stock market for many years. Don't try to guess the right moments to buy or sell. Don't try any fancy tactics or strategies. Just invest regularly and stick to it year after year. Now, he told me with some pride that he had been making 7% per year with the strategy for 30 years. He said, I've bought 2 houses with the profits, and I've put my kids through college, and I could retire today if I wanted to. Now, I don't know about you, but when I heard this, I was confused. I had saved about $10,000 at the time. 7% per year would be $700. I mean, it's nice, but not a life-changing amount, right? I thought that a good investment return would be at least 20 or 30% per year. So I asked Dave, 7% per year? Is it really worth investing if that's all you get? I should mention that this was during the great financial crisis, so investing was really stressful at the time. Dave looked annoyed. He said, you must not have studied math in school. 7% per year doubles your money in 10 years. I must admit that after this conversation, I was embarrassed for a long time. I studied physics in college, so of course I understood how compound interest works. But until I actually met someone who was using this principle in real life, it didn't really sink in for me. If you don't know what that means, compound interest is your money making money. It's kind of like, well, imagine that you're a baker and you bake some cookies and you sell the cookies and make some money. Then you take the profit and you buy even more flour, even more eggs and sugar and everything else, and you bake even more cookies, and then you make more money this way. Well, that's compound interest. It just grows and grows and grows over time because your profit is making you more money, and then you get more profit and you get more money, and so forth and so forth. And it really is true. Through this principle, 7% per year doubles your money in 10 years. Now, we struggle at our jobs or businesses. We work hundreds or thousands of hours to save money for ourselves, for our families. Wouldn't it be really cool if we could basically double or triple our savings without any extra work? That's exactly what happens when you use these moderate investment strategies like the one that Dave recommended. Of course, there are some risks. You have to understand some things before you start investing, but with such a moderate approach, you have an excellent chance of success over the long term. You just need to be patient and invest for years and years. I mean, that's pretty remarkable when you think about it, isn't it? Now, of course, a modest return like 5 or 7 or 10% per year, it's not gonna make you rich if you start out poor. If you want a miracle, you might as well play the lottery. But if you're working hard and saving money, I mean, there's a huge difference between just leaving your money in your bank account where inflation eats it up and investing it wisely, where you have an excellent chance of doubling or even tripling it over time. So that's the tortoise strategy, and it really works. This brings us to the second part of our video. Let's look at the Hare strategy. How smart is it to chase profits more aggressively? Okay, so I'm assuming that if you're watching this video, you're an amateur investor. You can, of course, hope that you're going to be very lucky and that you will achieve a better result than professional investors, than wealthy dynasties, than large investment funds, and so forth. That said, ask yourself how likely that is. I mean, think about it. You don't have the education, the experience, and the information sources and the other resources available to these big investors. In reality, the best result that a new investor can realistically expect is to kind of get the average market return. Actually, when you think about it, that's already a pretty great result for a beginner, right? It's kind of like an amateur cyclist finishing in the middle of the pack in the Tour de France. I mean, that's pretty fantastic, isn't it? So that said, how much does the average investor in the market actually make? Well, if we look at the most profitable long-term investments in the world, the stock market clearly stands out. And the average long-term return in various global stock markets has typically been around maybe 7 to 10% per year. Yes, of course, there have been better periods when the market has returned as much as 20% per year. And there have also been worse periods when the return has been much lower or even negative. But a typical long-term return is in the 7 to 10% range. There's a separate video on this topic in our channel if you want to learn more. So this means that for a beginning investor, making a profit of 7 to 10% per year long-term is already a good result. As we can see, that sounds suspiciously close to what my colleague Dave was making. Now, if you want to be a hare, not a tortoise, if you want to earn much more than this 7 to 10% per year, well, you are trying to jump over your head. You want to earn much more than most professional investors and wealthy dynasties with huge resources. You want to win the Tour de France, even though you're a beginner. Now, in order to try and achieve this, you will probably have to take huge risks. And in most cases, you will get a weak result or you will lose money. So in conclusion, well, actually, there's good news for tortoises. Of course, if you are a hare at heart, if you were hoping that investing will be the golden key which will quickly make you rich, you're going to be disappointed. However, if you are already working hard and saving money for your future, or for your family's future, then this video should be encouraging. You don't have to be a world-class investor to earn a good investment result. You don't have to be super ambitious or aggressive. If you choose a sensible, long-term investment strategy with moderate expected profit, you have a very good chance of growing your money over time. Does that make sense? Well, let me know in the comments. Oh, and by the way, if you found this video helpful, if you want to learn more about how to invest your money, make sure to hit that subscribe button and press the bell icon to get notifications when we launch a new video. And sign up for one of our free investing webinars at the link go.indexmasterclass.com. And I will see you very soon.